Hey guys, what's up? Hope you guys are having a great day today, and welcome back for another episode of the weekly market analysis. Yeah, so today was actually a pretty good day, or at least I should say the week has been pretty decent so far. Some trades actually came through. We went through a massive losing streak. Let's see, I believe if you guys were watching the last episode, or if you've watched last episode, we lost 9 trades in a row, I think, is what it's looking. Let's look right here. Let's see about this. Yeah, about 9 trades in a row. Yeah, not particularly the nicest of streaks. We are still waiting on confirmation as to whether the pound dollar is going to work out, but we actually had 2 trades that came to fruition. The dollar yen and the Aussie yen. Dollar yen ended up making us $102, and the Aussie yen lost us 85. So we did find 4 other trades that we're currently in the process of taking. Unfortunately, they're almost all of them are pretty heavy trades. And you got one that's risking, you got the pound Swiss that's risking 138, you got the New Zealand dollar risking at 112, and the Aussie yen risking 119. Honestly, the euro pound is under $100, so I don't really consider that to be, a trade that's risking a ton of money personally. But I mean, still, these 3 could easily make or break this. As you can see, because we actually ended up making more money than we lost in the most recent trades, we are now back up at 29.34. This is pretty positive news. Hopefully it holds and maintains. Right up here, we are estimated to make 296, and the market almost touched it. I mean, actually, let's go ahead and go look at that chart real quick. Oh, there's the there's the old website. Actually, it's really not that old. I created it about a year ago. Actually, I think I originally created this in 2018. Yeah, I originally created this website in 2018. And by the way, if you haven't checked it out yet, go check out newmillenniumwealth.com. It is where I post all my articles. I post my YouTube channel, my YouTube videos that I produce. I also just recently started my podcast, and I have recorded 10 episodes, and they're all posted on the website officially now. They don't have featured images. I still have to kind of create custom images. For those of you guys who don't know, there's a lot that goes into content production. So I'm actually going to go ahead and do this. Why you need to keep a trading journal, right? So I'm going to go ahead and keep this. So right here, this is the Matthew Spazzini program. That's the graphic that I have for the YouTube channel. It is now officially on iTunes, so go check that out. That's pretty cool. I'm super happy that it's on iTunes. And you have the little description, and then you got all the links for the follow me and the affiliate links and stuff. So it's actually pretty cool. But that being said, though, I would really like to have a custom featured image at the top. Something that I do when I create content is I love having custom images. One of my favorite ones is this one right here. What is technical analysis? Very slick, very simple. It's not overly complicated. It says New Millennium Wealth here, and it has like a little bookmark in the top right corner that I also really That said, I like to create these custom images. They're really nice. They give the overall blog a good feeling to it. And I personally really like that type of stuff. Now, if I'm completely honest with you, it takes a lot to create this. I mean, this one probably, you wouldn't think that it would, but I can be a very indecisive person. So it can take a lot to actually go out and create this. So not only do you have to write the blog, you also have to create the custom image for the blog. And then, that's not even including social media work. Social media work is where, now I gotta post this. Now I gotta create a custom image that looks just like this to post on social media. If it's on Pinterest, it has to be a completely different image for Pinterest. It's gotta have the right format. If it's for Facebook, this image probably will work just fine. So it kind of depends on the actual social media site you're posting it on. And then you gotta come up with the title, which is right here. It's pretty simple, right? For one post. But ideally, when social media, you should have multiple posts for the same piece of content. Different featured images, different keywords, different titles. So on Pinterest, it's been advised to me that for every one piece of content I produce, I should go ahead and I should essentially, create 5 different posts on Pinterest with different keywords, different titles, different images. And then it's also been advised to do that for Facebook. Just they didn't recommend 5 posts, but you could do a very similar thing for Facebook. And the main reason is I'm trying to think. The main reason behind it is that because of the Facebook news feed, there is, or even Pinterest if you've ever been on there, there's constant content that is always being posted. So older content is always being buried under the mounds of constant content, right? Constant content that other people created. So you have to constantly keep reposting your stuff to get it out there. Now, fortunately, there is software out there that helps you with this. There's tailwind.com that I've been using for Pinterest, and I think it also works for Facebook. I'm not sure how the images kind of port over to Facebook and whatnot. And then there's also Hootsuite, Hoot as like an owl, and though that is also a software where you hook it up to all your social media sites, you post it in one place, and it basically ships it out to all the media sites that you are effectively have an account with. And so there are pieces of software that help. The problem is they cost money, right? Hootsuite costs money, which I'm thinking about actually getting because it would make my life so much easier. And then Tailwind also costs money, but I'm using the free version right now, and so far I like it a lot. So I don't know. We're just going to have to see. But that being said, there's a lot that goes into content creation, and this isn't even talking about the videos, okay? You guys know how much... You guys know that I try to produce a video probably probably about once a week. That's usually what I try to do. And I really try my best to do it. But in the end, it does require a lot of effort because you got to edit the videos, you got to edit the audio. If you make a mistake in the video, you got to go do it. So, I mean, this whole content creation gig, if you want to call it, it's a lot of fun. It really can be, but there's a massive amount of work that goes into it. Okay, so here we are. We're back on the profile. The TradingView profile. I haven't updated these trades, so as you can see, I got New Zealand, USD, Pound Swiss, Aussie Yen, and Euro Pound. Those are not on here yet. I haven't posted them. I will be posting them at the end of this video. So let's actually, first and foremost, I want to check out, I want to show you the pound dollar. I already checked it out, but I want to show you the situation because it's so aggravating. So aggravating. All right. Pound dollar. Pound dollar, what have you been doing? You have been messing with my mind. That's what you've been doing. Anyways. Yeah, so as you can see here, initially, oh my gosh, the advertisements. It's so annoying sometimes. So as you can see here, we started coming down the minute we got involved in this trade. And I figured we were going to get stopped out for sure. Like, that is exactly what I thought was going to happen. But then we rallied all the way back up, and I thought we almost touched it. But upon closer examination, we did not. If you actually zoom in and stretch the chart out more, it came all the way up to 1.2642, and I have my target at 1.2644. 2 pips shy. 2 pips. So aggravating. And now we're down at our entry. So is it going to work? I don't know. I'm not really feeling overly confident about it at this point. Now that it's, fallen down to where I entered and whatnot, I have no idea. In fact, I could totally see this falling at this point. This could be classified as a double top. You know what? Is this a double top? It almost looks like a double top to me. I'm pretty sure this is. Yeah. No. No, this is not. Well, I mean, it may look like a double top, but it's actually not a double top. And here's why. When you're looking for double tops and double bottoms, it's important to keep this in mind. The right way to look at a double top and double bottom. All right. I usually say there's no right or wrong way to do stuff, but in my opinion, when it comes to certain patterns and measurements, Fibonacci measurements and things of that nature, there is. There is a right way to look at it. There's a wrong way to look at it. Now, you could look at it the wrong way, and you can still trade and make money on, measuring the wrong way or things of that nature. You can absolutely do that. It just requires, if you're going to look at this and say this is a double top, the highest high on the right hill here, and I'm sorry, this is a post that I made, so it's not going to be completely, I can't zoom out all the way here. So, actually, you know what? Screw this. Screw this. Let's just do this. This is going to be a lot easier. Let's just go to pound dollar. Open up a new chart or a new tab here. Come on. Load. Pound dollar. And here we are. And we'll close that out because we don't need that anymore. Boom. No, not yet. Right here. All right. So, when you're looking at this chart, okay, what you need to understand, and it's very important that you understand this, is that this is not a double top. First and foremost, there we go. That's exactly what I want. The highest high of the second hill in the double top. Okay, I call it a hill, right? We got the first hill, the valley, or the V, and then we got the second hill, right? The second retest has to have a high, so a wick that touches and at minimum is equal to the highest close of the second hill. Oh, actually, you know what? It almost appears as though it is. I might be wrong here. Ooh, you know what? That's really close. I would say that it does look like it touches. Yeah. Okay, so I'm wrong. I didn't think that this highest high here actually touched the highest close, but it actually did. It just barely did. I think they're literally equal to each other at this moment. Trying to compare the dotted line here just to double. Yeah, okay, I say they did. Okay, so this is a double top, which means I'm probably going to get screwed here. Even though double tops don't always work out, we are doing a double top in a scenario where we were previously bearish. We're bearish, and we got this big decline here, and now we've been coming back up. I don't know what's going to happen, but in reality, it looks like it's going to fall and stop me out. I could be wrong. Sometimes this happens where you get a rally here, we retest, we get rejected, and then we come back. But if this is a double top, which as you can see, we have a initial low, initial high, outside return or retracement. I prefer retracement than outside return, but they mean the same thing. You could use, they're interchangeable. So retracement, new higher high, higher close, new, and then you have a new higher low, and then you have a retest. If this breaks the V, I'm probably going to get stopped out. But what could happen is we could come up, have a retest, get rejected, and then bounce off from here. That could absolutely occur. So, I don't know what's going to happen, but it's very aggravating that it came within 2 pips and it got rejected. I'm thoroughly aggravated by that. I don't know if you guys would be, but I am. Because there's $296 of profit that we could be making and that we almost made. 2 pips shy. 2 pips. But this is, a lot of you are probably wondering, well, Matthew, why didn't you just take it? Well, first of all, I don't watch these live. One of the ways to control your psychology is you, for lack of a better term, you set and forget. Okay, that's the fun little terminology that you hear when in trading is you set it and then you forget it. So you do your back testing, you have a positive expectancy, you highlight trades that you want to take, and if the trades do come to fruition, like if you do actually get entered into the trade, you put your target on and your stop loss, and then you don't watch the trade. Maybe you come in and you look at it every day, or maybe you come in and you look at it once a week, but you don't really watch the trade. The reason for this is to help you control your psychology. Now, for people like me, I can't sit in front of the charts. I mean, I just showed you how busy I am with content creation. I can't sit in front of the charts. I don't have time to do anything of the sort. All I have time to do is take trades, right? That's what I have time for. So for me personally, I have to literally do the whole swing trading idea, which is just called swing trading. Which, by the way, if you are interested in looking at the different styles of trading, I actually have a blog here that I want to show you real quick. I actually wrote it a little while ago. Let's see here. The different styles of trading. Yes. So it's one of my older blogs. It doesn't have the fancy featured image like the other ones do. But, you know, basically we go here and we define the different types. We've got scalping, day or intraday trading, swing trading, and position trading, which position trading is so long term, it's almost, you could almost consider position trading to be kind of like investing. You're usually holding your positions for a month, a couple months, maybe even a year. So it kind of blurs the line between investing, but investing you hold for a very, very, very long time, usually multiple years. Whereas position trading, normally it's multiple months, not necessarily multiple years, but it can be years. I like swing trading. It's my, as I said right here, I don't even remember that I said that. Yeah, it doesn't require you to be glued to the charts all day. And it's long term enough to where you can take your time to analyze and decide what you want to do. So anyways, if you're interested in understanding the different styles of trading, go check this out. It's at newmillenniumwealth.com. It's under the blog and trading tab. So go check that out. It's pretty good information in my opinion. That being said though, I don't have time to stay glued to the charts. So I have to find trades ahead of time, put my entries on, and basically wait and see what happens. And that really has two benefits. Not only does it allow me to use my time more efficiently, I can go get other stuff done in my day, and I'm not limited to, sitting here and watching a trade. But on top of all that, I have the ability to control my emotions a lot more. I'm not watching it. Statistically, I have a lot less likely chance of moving my stop loss or of taking my profits too early. Now, if it's in your strategy to take profits, if it gets between 1 to 2 pips to your target, if that's part of your strategy and it's something you back tested, then that's fine. I don't have a problem with it. What I'm saying is doing it without back testing it that way is wrong, in my opinion. That is not right. Okay, so a lot of what I say is how anyone can make money doing anything in the markets type of thing. It's all based on if you're back testing. If you've back tested it, I'm fine with it, as long as you have a positive expectancy. My biggest concern is trading without a back tested strategy and not knowing whether you have a positive expectancy or not, and losing money. You're not being careful, right? And I've done that too. I'm not just pointing the finger at any one of you who are doing that. I'm pointing the finger at me as well. I've done that. We've all done that. Right? That's part of kind of this whole trading journey. What I'm saying, though, is once you realize that it's wrong, don't do it again. I was unfortunately stupid. I realized it was wrong. I did it anyways. Thankfully, it worked out for me. I know it doesn't work out for most people, though. I was trading without a back-tested trading strategy, and I actually made money. Thankfully, I decided to quit while I was ahead and start back-testing again before trading even more. And this was in the past, when I was still... But I had gone through training before this, and yet I got tired of waiting for the back-testing to be done. Life kept getting in the way, and I kept making excuses why I wasn't, going to back-test and whatnot. And anyways, the point was just... Man, I've talked for 20 minutes now, and we haven't gone through the charts. Anyways, let me finish this real quick, and then we'll go through the charts. The point is that I've done it. I've traded without backtesting. Trading with backtesting behind you is such a powerful thing. And you don't have to always backtest for the purpose of... you backtest not just for the purpose of seeing that your trading strategy is going to be successful or not. You backtest to create the belief in your heart, in your head. You got to believe in the system. If you don't, you're not going to follow it. You're going to make mistakes. So many people get this wrong. They're like, and in fact, I've actually encountered some people in the past where they were complaining or they were asking for advice on some kind of social media platform or whatever, and they're saying, oh, Matthew, or they weren't really saying Matthew, they were just kind of posting it out there, and they were saying, does anyone know how to stay consistent and to not make mistakes or whatever? And it's like, well, I'm like, well, the only way that I know is backtesting. But then they get all defensive about it, right? They get incredibly defensive about it, and they start to say, well, I've already backtested. It has a positive expectancy. It's fine. And I'm like, okay, but if you're making mistakes, there's something wrong. There's something wrong with your psychology. I'm not trying to say you're mentally ill. I'm trying to say that you haven't done the necessary amount of work. Maybe you haven't done enough work. If you're taking profits early, If you're doing things that are against your trading strategy, then you have not created enough belief in the strategy. And perhaps you're also watching the charts way too dang much, you know? So anyways, that being said, we could talk about that later too, but here we go. New Zealand dollar. All right, so we are on New Zealand dollar on the hourly chart, as we are always on, and basically I put this trade on a little while ago, and it was up here at the time, and we had just broken out, made a new higher close. I drew my fib retracement tool from the swing low to the swing high, and I got my 618 fib retracement at the 0.6012 price level. So I put my entry on, and we got filled. And we actually ended up getting filled. Let's see, what day was this? This was May 3rd at 1900. So that said, you know, I went ahead and I placed my stop loss and my target, and I put this nice little, I don't even know what you call it. It's a long position tool that TradingView gives you, and it's really nice. So it says you have a risk to reward ratio of 1.4. So I have 1.4 more reward than I have risk, and that's ultimately my trading plan. I have to at least take a 1-to-1, and it's best if I can take more than that, but at minimum a 1-to-1. I put my stop loss 10 pips below the lows here, which gave me 59,006. And yeah, so on this particular trade, we got New Zealand dollar. We're risking $112 to make $155, so not bad at all. Hopefully it will come to fruition. I mean, honestly, when I zoom out, again, we had this massive drop, but we've been rallying higher and higher and higher. I think there's a good chance that we will continue to rally. But the markets have just been so volatile and crazy, I really don't know for sure. I don't have a crystal ball. But I think it's going to continue to rally. Moving on. Pound Swiss. Again, very similar situation. We had a massive drop-off in the market back here in February, and now we're kind of rallying back up again. I don't know if we're going to continue to rally. In this particular situation, very similar to our pound dollar, we had a double top right here, which was a beautiful double top. We had the highest high on the second retest has equaled the highest close, so this is a good double top. And on top of this, we also had a break of the valley, or a break of the V. And that is a sign that this is probably going to continue lower. But sometimes, actually a lot of times, double tops do this. They break the V, and then they head higher. So that's what I'm kind of betting on here, that it's going to continue higher. But usually a double top, a good double top, is a reversal sign. So this is basically saying that the market ran out of steam, it has no more momentum to push higher, and it's going to continue to go lower. And considering the fact that we were bearish literally since December of 2019, let's see if we were bearish longer than that. Yeah, it looks like we were bearish all the way back here in May of 2019 as well. Odds are this could just be a short-term retracement in the market, and ultimately this will continue lower. I don't really know for sure. I mean, like I said, nobody has a crystal ball, guys. You know that. I say that all the time. I'm going to be very, very famous or very annoying for saying it. Nobody has a crystal ball. So no matter how much you think you know your stuff, the market's always going to just screw with you, because that's what the market loves to do. The market is never rational. The only predictable thing about the market is how irrational it is. So that being said, though, that's what makes it fun, right? There's a lot of people who get into trading and they're like, oh man, I feel like such a loser. I feel so awful. I do this too. Like, after I go through a massive amount of losses, I personally feel like, I'm always wrong. What's wrong with me? What's wrong with me? Right? But in the end, there's nothing. I always have to keep reminding myself, there's nothing wrong with me. It's not me. It's the markets. And that's just the nature of the markets. So that being said, guys, there we are. There is the pound Swiss. As you can see, we broke above the highs here, created a double top. We are retracing back in our 618 retracement. It looks pretty good, but this pattern, I don't know. I don't know what's going to happen. I think it's going to go higher, honestly, but I'm not 100% sure. Aussie yen. I'm not feeling nearly as confident about the Aussie yen. As you can see, we've made a new higher high, higher close. We didn't have a double top, thank goodness. This is not what I would consider a double top, not nearly big enough to be considered one. But we did fall, hit a 618 retracement, and now we're kind of waiting for it to go higher, but it's looking like it's actually going to go lower. Now, I didn't get involved up until here, but honestly, I just got stopped out from Aussie yen at this point. I took a trade from, I had measured the fib retracement tool from this swing low. Was it this swing? I can't remember if it was, I think it was this swing low to this swing high, and it didn't work out. So I'm trying a second time, but I don't see it working out. I mean, it's already heading lower. I don't know. I don't know what's going to happen, but I'm kind of thinking this is going to stop me out. That's my intuition. That's what I'm thinking, because if it wasn't, then it would have probably retraced here and then continued to rally, and it isn't doing that. In fact, it's pushing this support level of 67.99. So I'm thinking that this is going to continue down. And if it closes below there, my thought of that will be even stronger. Euro pound, get rid of this advertisement. Euro pound came down here, broke below, closed below this structure level, and then started to retrace back up here. I found this at the blue line, and ultimately I'm just now kind of waiting to see what's going to happen. So far, we got pretty close to the target, but we haven't pushed it any further than that. So not really sure what's going to happen with this, but I'm feeling pretty strong about this one. It's a little different. As you can see, we've been in a bullish trend since March of this year. So actually not since like March 18th. Yeah, so it's not like we've been in a bullish trend for very long here. But now we're just kind of chopping sideways. Just been in a lot of consolidation, which is pretty normal once you get around the summer months anyways. But that said, I mean, despite the normalcy of it, we are in a very volatile market situation due to COVID-19 and all of that garbage that's going on in the world today. So, yeah. Not really sure. I feel fairly confident about this one. I actually think this is pretty major structure. As you can see here, this came up here, retested this major structure level, and it got rejected. See, the more times you have price action retest a particular structure level, a particular price level, the more significant that structure becomes. So you see, we had retest, 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 retest. So that's what? 5 different times the market has retested the 88.51 price level. That's a pretty strong indicator that the market is respecting that area. Now, it's not to say that this isn't going to try again to retest and totally smash through it. That could totally happen. But it looks as though it's not going to do that. All right. Well, guys, that's going to be it for the charts. I know I kind of rushed through that. I have to go do something with my family and whatnot, so I don't actually have a whole lot of time to talk about what we were talking about before. But guys, ultimately, you need a trading journal. You need to backtest your strategy. You need to have a trading plan. But even if you have those things, know that it's going to be common to make mistakes. Okay? Know that that's just the way it is. It's going to be common to make those mistakes. They're not, it's not uncommon to do that. Like I said with the guys that I've been talking about, I actually kind of got upset that I felt like I was blown off when I gave my advice. And it was just my 2 cents, right? It was just my belief that, hey, if you're struggling with your trading in your live trading and whatnot, it's largely because I don't think you've done enough work for your psychology to really be trading live. Like if you're having issues, it's because, in my opinion, you haven't done enough backtesting. You haven't done enough belief building in your process, in your strategy, in order to trade accurately. If you're moving stop losses, if you're taking trades off early, whatever you're doing, there's a reason why. You may have done the backtesting, and you may still be struggling. If you're struggling, you're probably watching the charts too much. So you might want to consider watching the charts less. Try to place your trades and then get up, get off your butt, go do something. Don't live your life looking at a chart. Okay? I think that's the most important thing here. I think so many people get in trouble by looking at the charts all the time, just watching them. I was like, oh, what's going to happen? What's going to happen? Oh, it's going down. Oh, it's going back up. What's going to happen? Actually, I wanted to do this one. Oh, no, I thought it was going to go higher, but now it's going down. And oh, no, I'm freaking out. And I don't know what I'm going to do. And I'm stressed. And I'm going to go home and kick my cat. Don't kick your cat. That's not very nice. I don't like cats, but I would never recommend that somebody go kick their cat. It's just kind of a joke. Maybe it's mean if you like cats. But, but it's my show. So, but the point is that if you're watching the charts too much and you're getting too emotional about it, you need to step away. You need to watch the charts left. Look, you've got your stop loss. You've got your entry. You've got your target. Okay? There's going to be slippage. There's going to be times where the market might gap down and miss your stop loss or whatever. Hopefully the broker will get you out if you at a worse price if you had a stop loss there. Sure, there are going to be times where not watching the market actually hurts you, because it's hurt me in my back testing before. I've had the market gap around my stop loss. This is very common in the stock market, actually. It's much more common than it is in the Forex market, but it still happens in the Forex market. Okay? The truth is that while it sucks, while it hurts, that's just trading. And in the end, you're going to be benefited more by not wasting away watching the charts. Look, you got into trading. Probably at least for me. I know for me, I got into trading because I wanted the freedom of time. It's kind of funny because now I'm in all content creation. My time has been significantly reduced, but I still have the freedom of time more so than I would if I worked a full-time job. And I think a lot of you got into trading because you wanted the freedom of time. And I think that's a good thing. But you're not going to have the freedom of time if you're constantly hounding over your charts. You know, you don't just want to replace one master for another. You want to be the master. But if you're placing your time always looking at the charts constantly, then are you really the master anymore? So keep that in mind in your trading. You really, really, really need to keep that in mind. Make sure that you are backtesting your trading strategy. And if you are live trading after backtesting, and you're still having issues, I would say you need to go back to backtesting. You need to go back to demo trading on live data. And then in the event that you don't want to do that, then perhaps you just need to stop looking at the charts. Take your trades, put your orders on, and stop looking at the charts. That is one of the key things. And try to control yourself from going back and looking at it. And if you are so addicted to this, to the point where you can't not look at the charts because it is ripping you up emotionally, then I'm sorry, you shouldn't be trading. You just do not have the psychological and emotional fortitude to trade. Look, it's hard. I struggle with it. You guys know, I've said this a million times, I'm not a consistently profitable trader yet. I'm still in my back testing phase. While I have taken trades, live trades before, and they've worked out for me in the past, I know the emotion that goes into it. I traded and I didn't have a strategy for a little while in the past, right? It sucks. Trading with a strategy is supposed to alleviate that. It's supposed to help that. And if you're not going to let it do it, then there's something wrong with your trading. There's something wrong with your psychology. You need to do something about it. Don't just waste away watching the charts. Stop watching the charts. Put your entries on. Take the trades. And go live your life after that. You got your orders. Your broker's watching it. They got automated systems. That's why you're there. That's why you're at your broker, right? I would hope so, because they're helping you in that sense. They're allowing you to do this kind of stuff. This is the wonders of the 21st century. You don't have to sit there and watch it. You shouldn't sit there and watch it. I mean, unless you're freaking scalping or something where you're taking like tiny little cents here and there and you're making millions off it, but that only works if you got like millions upon millions of dollars, and most of you don't. Otherwise, you wouldn't be trading. Seriously, if you had that kind of money, would you still trade? For me, I would, because I love the process. I love trading. It's part of my identity, I guess. I mean, I love it. It's good. It's fun. Backtesting sucks. That's boring as snot. But actually trading live, it's actually quite invigorating. But it's also very frustrating too, just like anything. So guys, take that to heart. I think it's a great lesson. It was a lesson that was given to me by some of my trading mentors. Okay? It's a good lesson. If you're having psychological problems with your trading, get off your butt, get out of the office, and stop watching your trades all the time. And then if you are still having issues, then either you need to go back down to a demo account or go back to backtesting. And if you still have problems, then maybe you just shouldn't be trading. I understand having hiccups here, and there because we're not perfect, right? So I understand that. I'm not opposed. I don't have a problem with you messing up every now and then, right? But if you're doing it all the time, then there's a problem. You need to admit that there is a problem. Not come back to whoever's giving you advice and say, oh, I already did all the backtesting, I'm fine, but whatever. Not be defensive about it. Admit that there's an issue, that you keep doing this, and you're not really helping yourself. Ask yourself, are you actually trading or are you gambling? And then, kind of go from there, really. Once you admit it, you can start to move on. Start to educate yourself. Start to research. What can I do about this? Well, I'm going to tell you. Stop looking at the charts. If that's not fixing your problem, then freaking go back to demo trading. Stop trading with your money. That's still a problem. Then, go back to backtesting. And if you just can't handle this psychologically speaking and emotionally, maybe you need to just hire somebody else to do it for you. At least you understand what you're doing now. You understand the process. So hire somebody, figure out what they're doing, figure out what their strategy is and how they're going to make the market, and trust somebody else in doing it. Now, granted, I know that's really hard to kind of give that control over to somebody else because there's a lot of people out there who, this is the whole reason we're into trading is because we want to do it for ourselves because we think we're the best people to do it. And in reality, I would agree with you. But if you can't handle it, then get out. This is not a place to dabble with your money. This is not a place to screw around. Again, having some issues here and there is not a problem because most of us are all new at this, right? This isn't something that comes naturally to most people. But if you continue to mess up over and over and over again, then there is a problem that you need to address. And it's either because you haven't done the necessary work ahead of time, or you're watching the charts too dang much. And only you can answer that question for you. And I think a lot of people only get to that point after they've lost a ton of money and they've experienced enough pain. I'm not trying to say that pain is the only way that changes people, but sometimes it is. I would encourage you, don't wait that long. Don't suffer the pain. Take the advice of people who've lived through some of that, or who've seen others live through some of that. Okay? And don't get defensive when somebody gives you advice, especially if you're the one that asked for it. Especially if you made a post on a social media account, don't get defensive that somebody offered their advice of, how they think you should handle it, or at least what they do to handle that process. Don't waste, but the ultimate message here is don't waste away looking at charts. Use the freedom that trading can offer you to live a life that others envy. A life of freedom of time, because we don't get time back. It's the one non-renewable resource that we have in this world. Don't waste it looking at charts. Set your trades and then go live your life. Alright guys, I hope you enjoyed this episode. Make sure to share it with a friend, anyone that you think is going to find value and get interest out of this. And don't forget to like the videos and subscribe to the channel and help me grow this community of individuals that all want to become financially free. I am actually going to be starting a private community. It'll be a small subscription fee, but for people who can all come together, talk about trading, talk about financial freedom and economics. And it's not just going to be limited to trading, as I just said, but it's going to be great. It's going to be a private community, so you're only going to get in if you're subscribed to it. But it's not going to be very expensive. I just have to charge enough money to keep people who really aren't interested in these topics out, right? Keep the trolls out, for lack of a better term. So when that is all set up, I will let you know. You will have direct access to me If you want to ask me questions, if we can bounce ideas off each other, I think it's going to be a really, really wonderful opportunity. We can post our trades on there. If you're interested in Austrian economics, or if you're interested in economics in general, if you're interested in entrepreneurship in general, like blogging and YouTubing and podcasting, all of that stuff, this is going to be a great place for you. If you want to take control of your life and your freedom, this is going to be a great place for you. But it's not set up yet. Still in the process. I will let you know when it's done. And we'll go from there. So guys, if you'll do all that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly, and have a great